Altcoins are waking up again, and if Bitcoin has truly bottomed, like a lot of the on-chain data suggests, then the next few months could be huge for selected altcoins. But here's the catch. Not every altcoin deserves your attention. Some will recover strongly, others may never come back. So in this video, I'm going to show you how to spot the altcoins with real upside and how to avoid the ones that are likely already dead. Let's break it down in a simple way. Welcome back to the Microcryptosofts, where we explain Bitcoin mining, crypto trends, and crypto education in a simple way. If you've been watching the market lately, you've probably noticed something interesting. Bitcoin moves a little higher and suddenly altcoins start reacting fast. That is not random. There's a reason this happens. And once you understand that reason, you can make much better decisions in crypto. Today I'll walk you through what's happening in the market, why altcoins are beginning to recover, and what signs to look for if you want to find strong projects before the crowd does. Now, this is not financial advice, it's education. The goal is to help you think smarter, not just buy whatever's trending. Now, speaking of growth and real-world adoption, if you're serious about mining your own Bitcoin instead of just watching the charts, check out our Microcryptosofts v.0.1 and Microcryptosofts 4.0.9 software. Both versions are designed to help you mine Bitcoin faster, smarter, and more securely using advanced cloud-based technology. They don't rely on your system's hardware power. Instead, they connect to optimized mining servers, allowing even beginners to start earning BTC efficiently. Thousands of users have already used our software to kickstart their mining journey, and it could be your perfect entry point into this next crypto boom. Now, back to the big picture. Let's start with the bigger picture. For the past few years, Bitcoin has been the main character in the crypto market. It got the attention, the headlines, the institutional money, and the major news catalysts. We saw things like Bitcoin ETFs, big companies and financial institutions entering the market, and a more crypto-friendly political environment in some regions. All of that helped Bitcoin move higher. But while Bitcoin was getting all the attention, many altcoins were left behind. That is important because when Bitcoin runs alone for a long time, altcoins often get crushed in the background. They lose value against Bitcoin, retail interest fades, and people start assuming altcoin season is over forever. But markets do not move in a straight line, they move in cycles, and right now we may be entering a new phase of that cycle. One of the most useful ways to understand this is by looking at the relationship between altcoins and Bitcoin. When Bitcoin starts moving up with strength, altcoins often follow, but usually with more volatility. That means the gains can be much bigger, but so can the risks. This is why timing matters so much. If you buy an altcoin when everyone already loves it, the easy move may already be over. But if you buy when the chart looks ugly, sentiment is bad, and nobody wants it, that is often where the opportunity lives. That's the part most people struggle with. It feels uncomfortable to buy when a coin is down 80%, 90%, or even more. It feels safer to buy after it has already pumped. But in crypto, the safest looking moment is often the most dangerous one. And the most uncomfortable moment can sometimes be the best one. Think about it like this. Imagine a window cleaner working on a tall building. If the rope fails when he's high up, the damage is serious. But if it fails much closer to the ground, the risk is far lower. Crypto works a bit like that too. When an asset is already extremely stretched upward, the downside risk grows. But when it's been crushed and is sitting near the floor, the risk-reward setup can improve. That does not mean every beaten down coin is a good buy. Far from it. This is where project quality matters. So what should you look for? First, look for projects that have survived multiple market cycles. That matters because surviving more than one cycle usually means the project has a real community, a real product, or at least enough staying power to remain relevant. Second, look for projects that make money. This is huge. In crypto, many narratives come and go, but real revenue is a powerful signal. If a project is generating fees, attracting users, and producing cash flow, it has a much better chance of surviving and recovering when conditions improve. Third, look for strong ecosystems. For example, if a chain like Solana is active, then projects inside that ecosystem can benefit from the flow of capital and user activity. If a decentralized exchange on that chain is making meaningful fees, that can be a strong sign. If a chain has growing stablecoin activity, rising trading volume, and active on-chain users, that is usually much healthier than a chain that looks dead. That's why tools like DeFi Llama and Token Terminal are so useful. They help you look beyond hype and into the actual fundamentals. Let's say you're looking at a project like Render or similar large altcoins that have been through several cycles. The chart may look ugly right now. In fact, that is often exactly what you want to see if you're hunting for opportunity. Why? Because a project that already made huge gains in the past, then sold off deeply, can still come back hard if the market cycle returns and the fundamentals remain strong. Render is a great example of the kind of project people often ignore too early. It had major upside in the past, then got crushed, and later recovered again. That pattern teaches us something important. A coin is not automatically dead just because it fell hard. The question is whether it still has users, revenue, funding, and a reason to exist. That is the real test. Now let's talk about ecosystems for a moment. On Solana, for example, the network has remained active. If you check the data, you can see that stablecoins are still moving, DEX activity is strong, and some applications are generating serious fees. That matters because active ecosystems tend to support stronger token recovery over time. Projects like Jupiter are good examples of this kind of setup. A DEX that sits in the middle of a busy chain can benefit every time trading activity grows. Same idea with Aerodrome on Base. If the chain is growing, the key infrastructure projects inside it often get a second wave of attention. And then there's the difference between what looks exciting and what looks actionable. Some coins have already had their big move. They may still go higher, but they are no longer the obvious cheap idea. Others are still sitting near their lows or recovering from a deep drawdown, while their revenue and usage remain solid. Those are the kinds of charts I find more interesting. Not because they are guaranteed winners, they're not, but because they offer better asymmetry. That means you may be risking less for a possible larger upside if the market turns in your favor. Now, one thing I want to be very clear about is this. You do not need to chase every coin. In fact, you shouldn't. A smart altcoin portfolio is usually small and focused. Maybe 5 coins, maybe 10 at most, if you really know what you're doing. More than that, and it becomes difficult to track everything properly. And another mistake people make is assuming every altcoin season will look like 2021. It probably won't. The next cycle may still produce strong winners, but not every coin will do 20 times, 50 times, or more. In my opinion, we are more likely to see selective winners instead of broad madness across the entire market. That means research matters more than ever. This is why I keep coming back to the same 3 questions. Does the project have money or revenue? Has it survived through multiple market phases? And is the current chart showing a strong setup, or is it already extended? If the answers are good, the project deserves a closer look. If not, move on. And please remember, buying cheap does not mean buying random junk. Cheap is only good if the project can survive long enough to benefit from the next wave of market demand. That is the key difference between a smart risk and a blind gamble. So if you want to improve your crypto game, stop chasing excitement first. Start looking for strength under the surface. Look for revenue, look for activity, look for surviving projects, look for ecosystems with real usage. That is where the next strong altcoins are more likely to come from. So, to sum it up, altcoins may be entering a stronger phase again, but the winners will not be random. The best opportunities are usually found in projects with real revenue, real activity, and enough history to survive tough markets. Don't buy just because something is popular. Buy because the fundamentals, the ecosystem, and the chart all make sense together. If you enjoyed this breakdown, make sure to hit that like button, subscribe, and turn on notifications, because here at Microcryptosofts, we decode the crypto world every single week. And hey, if you're serious about mining your own Bitcoin, check out our Microcryptosofts v.0.1 and Microcryptosofts 4.0.9 software, built to help you mine faster, smarter, and more securely than ever before. This is Microcryptosofts, and as always, keep mining, keep believing, and keep growing with crypto. See you in the next video.